All right, folks, we're going to take a look at Chapter 9 now. So notice we're taking a look at, let me turn this on here, business income, deductions, and accounting methods. So, yeah, this is individual tax, but a lot of these things show up on individual tax returns. So this is, we're getting to the chapters where it's starting to switch over a little bit, okay? So we got to take a look at this stuff too. All right, so first thing, we're going to take a look at what are the common business deductions, okay? What are the limits of making those deductions? What are the different accounting periods we can use? And using cash and accrual basis. So there's some obviously there's differences there. We all know from our accounting classes, but we're going to take a look at some of those items from a tax perspective, okay? All right, so the first thing you should know is something called the gross receipts test. Okay, so take a look here. Okay, gross receipts test. Basically, the gross receipts cannot exceed $30 million for the 3-year period preceding the current year. Okay, so businesses without 3 years of data can use the period for which the gross receipts are available. Okay, so for short years, they annualize it by multiplying by 12 and dividing by the number of months. Okay. And by the way, notice tax shelters never qualify. Okay, so they cannot exceed $30 million. That's per year for the preceding 3-year period. And that basically makes them defined as a small business. Okay? All right, so here's a question. Okay. So Blue Corp began business on July 1st of this year, and they had gross receipts of $14 million. Can they use the cash method? So let's see, they were open July. So July, August, September, October, November, December. They were open for 6 months. So if so, that would be, okay, so they're open for 6 months, right? And you got 6 months. So for 12 months, that would be 28 million. And 28 million is less than 30 million. So the answer is yes. That's why. Okay? All right, now any kind of business and income deduction, right? So we've heard about this before, but they must be directly connected to the business activity, and they're supposed to be ordinary and necessary. Now, this is not that easy to say. First of all, ordinary and necessary means conducive to profit generation, meaning to make money, and reasonable amount means not extravagant. Well, that's kind of tough to define. And you don't have to worry about it because if in doubt, the IRS will define it for you. So again, it's kind of tough, but it's open to interpretation is really what I'm trying to point out. Okay, so here, chapter 1, question 1. Which of the following is a true statement? Here's your question right here. Which of the following is a true statement? Okay. All right, there's your choices right there. So answer the question, and then we will move on. Okay? All right, now we're going to take a look at something called reasonableness. Remember, they say you got to be reasonable. So Rick hired his brother Tom. Rick, he hired Tom part-time. Same duty as other employees, but he paid him $5 an extra. He was trying to be a nice guy, help provide support for Tom's education. At the year end, Tom had worked a total of 100 hours and received $2,500 from Rick. So basically $20 an hour, $25 versus $20 an hour. What is the amount that Rick can deduct for compensation that he paid? Okay, so how much can he deduct as compensation? Okay, well, what do you think? Here we go. He cannot deduct that extra $5 an hour because it's unreasonable. Now, what is the likelihood of getting him in trouble for this? Probably not that great, but it's because it's considered a non-deductible gift to Rick. That extra $500, that's considered a gift. Okay, so he can deduct $2,000, but not the other $500. And again, it's circumstance driven. Okay, so really it depends on what information the IRS has. How tight would they look at this? I don't know. If they were auditing you, conceivably very tight. Okay? So here you go. Here's question 2. Dr. Cohen's CPA. So I have a CPA. His name's Nick. Nick said I should hire my 12-year-old daughter to clean my CPA office and pay her $250 per hour for 2 hours. Cleaning people normally get paid $15 per hour. Should Dr. Cohen take Nick's advice? Yes, no, maybe, or D, yes, if he pays in cash. Okay, question number 2. All right, we're going to move along. All right, now some other limitations on these business expenses. Okay, so no deductions for fine, bribery, courts, any of that kind of stuff. Political contributions, bribes, not allowed. You cannot deduct interest on loans where the proceeds are invested in municipal bonds because those are not taxed. And it can't be for key employee life insurance premium. Okay. Now, capital expenditures, those are put on your balance sheet and they're depreciated. Okay. Personal expenditures, they're not business related, so they can't be on there. And there is a limitation on business interest deductions, okay? And again, it depends on whether it's a small business or a large business. And then there is a loss limitation on business depositions of property. So if you lost money on a property, okay? So capital expenditures, let's look at that first. You probably know about this. They provide future benefit beyond a year, right? That's why we put it on our balance sheet. We capitalize it rather than deduct it. We depreciate it. By the way, Section 179 is actually an expense where you're expensing it. Again, we haven't really talked about that yet. That's really more, that's over in the business section. But Section 179 allows you to deduct the full cost of it, well, a certain amount of the full cost of an item so that you can get the benefit this year to lower your taxes. And also, there's a 12-month rule for prepaid expenses. You can deduct the benefit if it's less than or equal to 12 months, and they do not extend beyond the end of the tax year. Doesn't apply to interest expense, can't do it for that. And it can be difficult for accrual taxpayers because economic performance is also required. So for those of you that are accrual-based, you can't really do it because by accruing something, economic performance hasn't happened, and that actually creates a bit of a problem, okay? So here's an example, okay? Ben, he's cash basis taxpayer, makes the following payments on June 30th of this year. $10,000 for the next 10 months of utilities, $12,000 for insurance over the next 24 months, and $9,600 for the next 8 months of interest on a business loan. What amounts are deductible this year, okay? So what can he deduct this year, okay? So, first of all, he can deduct all of the utilities. Why? The benefit does not exceed 12 months, and the benefit ends prior to the end of the next year. Okay, so he can do that one. Ben can deduct $3,000 of the insurance because the benefit exceeds 12 months. Hence, Ben can only deduct the 6 months in this year. Okay, so because that went for 2 years and went past the end of the second year, can't do it. And he can deduct $7,200 for interest because the 12-month rule does not apply to interest. So if you look back here, how much did he have on interest? $9,600 for 8 months, and he has 6 months, so he can deduct $7,200. Okay? All right, folks, I'm going to stop right here. That's part 1 from Chapter 9. Talk to you soon. Bye-bye.